Hey, this is part 3 of my analysis between single-family investing and apartment investing. And if you haven't done so already, I highly recommend you watch both part 1 and part 2 of this conversation. We have been going in depth. We've got 10 categories that we've been using and discussing the difference between single-family and apartment investing in those categories and seeing who comes out on top. So category number 8 is about getting a discount. As an investor, we are always looking for discounts. With single family houses, I can always get a discount. I can negotiate, I can get a discount. Someone has a discount already and they're selling a discount. They come across my desk all the time. There is a large volume of discount single family houses out there. Not so much on the apartment building. We talked about the sophisticated investor. It's Mike Tyson versus Holyfield. It's gonna be a fair fight, whereas on the housing side, it's gonna be a great negotiator against a homeowner that just wants out. You see, it's much harder to get a discount with an apartment building unless you're someone who is willing to go to a dilapidated part of town and they start buying everything in that neighborhood. And then they work very hard to get things rezoned and changed, and they work with the city. And eventually what they're trying to do is take this abandoned area and improve it. Now, if you are wanting to endeavor in that type of an investment strategy, that's a painful, long strategy, 10, 15, 20 years. Now it'll pay off at the end, big time, but that's a lot of work going in there. And so the only way I see apartment buildings getting those kind of discounts is to do a strategy like that, but that's less investing and more city planning. So the category of discount, I give to the housing. So far, we've looked at 8 categories. Single-family houses have beat out apartments in all 8 categories, hands down, as far as I'm concerned. But number 9, we've got a little bit of a debate, and that is portfolio. With a single-family house, with houses, to increase your portfolio, you gotta kind of do it one at a time, one house at a time. Now, it is possible to go pick up a pack, 10, 20, 30 pack, but getting packs as deals are more difficult because portfolios are typically owned by investors. Remember, one of the benefits of single family is that we can negotiate against regular homeowners. Whereas with portfolio properties, you're typically dealing with another investor. Increasing your portfolio with single family houses can be slower because we're doing it one at a time. With apartments, if you get a deal, which is a big if, your portfolio can be made. If you find a 100-unit apartment building sold by a distressed investor who just wants to dump it, you've done great analysis, you know what the rehab is going to be, you have a great idea about rent, and that rent actually comes to fruition, all those rent costs, your numbers that you estimated were spot on, you might be able to get a large portfolio with 1 deal or 2 deals. That is an advantage for the apartment building. The issue with it is that it happens pretty rarely. That's a lot of things that have to go right in order for you to have increased your portfolio very quickly overnight. It's the tortoise versus hare mentality. You see, apartment building is how the hare does investments. My approach is more tortoise. I'm a real estate investor. I'm in this thing for the long haul. I'm not trying to get rich quick. I'm in this thing for cash flow for my kids and my kids' kids. I'm in this thing for legacy. But if you want to increase your portfolio very quickly, just like the hare, you can do so with apartment buildings. The other thing I want to talk about on this portfolio side is rent increase. There are some popular educators, finance educators that I actually respect. And if you read in their books, one of the things that they say is if you buy an apartment building and then add a feature to every single unit, you can increase the rent of every single unit. And the example they give is microwaves. That's not how it works. Like, that's the dumbest thing I've ever heard. That all of a sudden these tenants are gonna go and say, oh, this comes with a microwave, I'm gonna give them an extra $100 a month. That's dumb. Apartment rents, more than even single family rents, are determined by the market. Very few amenities will drive rents. Pools, saunas, that kind of thing. Workout centers will drive rents, but there's a top line margin of that. Because if someone can rent apartment A for $800 and apartment B for $1,000, but the amenities at that one are the pool and the workout center, well, how much is a gym membership? So the amenities, you can get more, but it doesn't increase exponentially like that. So a lot of the things that you see talking about increasing rent by adding microwaves in is not reality. That's not how it works. However, if you can find the exact right scenario, you can increase your portfolio significantly, very quickly with apartment buildings. So I will give the edge in the portfolio to apartments. The 10th and final category is the home run potential. Which do you have a chance of hitting an absolute home run on? Depends on how you define a home run. See, for me, a home run would be I'm all in at 50 and it doubled. It's now worth 100. Some would look at that and say, well, that's only 50 grand. Let's go do 50 million, have it double and turn into 100 million. Therefore, we make 50 million. That's how they would define home run. So with the single family house, because we're doing it one at a time, basically, because that's how the deals are done, it's a volume game and it's really more about operational efficiencies. Can you continue to make offers, put properties under contract, close them, fix them, and rinse and repeat? An apartment is more like a business than it is an investment, though people will disagree with me on that. But it is. A business is valued based on its earnings, and an apartment is valued based on its earnings. I mean, it's a business operation. A successful, booming business is always a better return. It's always a bigger home run than real estate. It's much better to invest in a business that explodes than it is any kind of real estate. If you were an equity position in Amazon or Apple or Microsoft or any of those large companies now, early on, man, that's a way bigger return on investment. The major problem I have with apartment investing is the value is changing based on performance. In order to get into these deals, the massive amount of leverage that you've got to have. Putting other people's capital at risk is a problem that I have. And everything has to go exactly right because it's more of a business than a real estate investment. See, if everything goes right with that apartment building and you operate that apartment like a business, you have the bigger chance of hitting a home run. So I'm gonna give the home run factor to the apartments if everything goes right. I've given the advantage on apartment investing on two categories: the ability to have a large portfolio quicker and the ability to hit a home run. But on both of those scenarios, every single thing has to go right. And if you get it right, you can hit a home run. But if you get it wrong, you can strike out big. Single family houses allow for a lot more flexibility than apartments. They're easy, they're not complex. Me as an investor who wants to follow the number one investing rule, which is don't lose money, I want to go with something that doesn't have so many degrees of gotta get it right, because I understand that Murphy shows up. And when Murphy shows up, he wrecks it all. We've gone through a pandemic. All of my rents have been collected. We haven't had to evict anybody. We've been cash flowing just fine. We've been continuing to add to our portfolio with discount income property. On the apartment dwelling side, I know a lot of guys are really freaking out because their occupancy is way down, their rent collection is way down, and they've got a gigantic principal and interest payment on the backside. We've spent a lot of time categorically breaking down each investment. We've looked at all 10 categories. Those 10 categories are value, occupancy, rehab, financing, acquisition, exit strategy, opportunity, discount, portfolio, and home run. Houses win 8 of those categories, and apartments win 2 of those categories. So here's my opinion on this whole thing. Go get a single family house that you can buy at a discount, get it rehabbed, get it rented to a nice family in a nice neighborhood, and hold that thing for the rest of your life. That's the formula to increase your passive income. I say all of that to say this: hands down, the best investment for most investors to get in, to stay in, to increase passive income, to increase your wealth is undoubtedly through investing in single family houses. They're more secure, they're more predictable, they're more safe, they're valued based on comps. So in conclusion, I've done a lot of deals, both on the commercial and the residential side, with banks and with private money that involved multi-units and single family. This is my experience. This is what I think. This is my opinion. Investing in a house, particularly if you're new, is the safest way to invest in real estate in America today. Hey, thanks for sticking with me. That was an extensive analysis of apartment investing and single family house investing. And I really appreciate you watching all the way to the end. I'd love to hear what you have to say in the comment section below. I'll be replying as much as I possibly can. I enjoy the back and forth. If you like this video, hit the like button, subscribe, and I'll catch you on the next one.